Good morning, good morning, good morning. My name is Don Daniel and I am the founder of Pill Method International, a better way to eliminate debt. And for the last 18 years, we've been sharing the truth about how lending actually works. And today, we're going to be discussing the mortgage matrix. Do you want to take the red pill or the blue pill? And we're going to be talking about the significance of the red. And it just so happens that that the name of our our business is Pill Method. And Pill stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. And we're going to be talking about the red pill or the blue pill, and the matrix that we're in terms of, do we really understand what's going on behind the scenes? When we are living our lives, we're going to work, we're coming home, we are buying things on time, like our house, like our car. But do we really understand what's going on and who is really making money? What are we actually generating when we pay interest? Right? What is our part in the economy when we borrow to live? When we borrow to live, there's a right way to do it, and there's an inefficient way to borrow. So we're going to be talking about that today. So I'm going to put my link at the top of the room here. All right. And it is ice10k.com. ice10k.com. There we go. Add the link. And there it is. All right, folks. So that's our link. If you want to see what we're talking about today, go to YouTube, and you can actually watch some of the examples we're going to be putting on the screen, because I have one on here right now talking about the red pill and the blue pill. So we're going to share that screen with you guys, and we're going to talk about that right now, and what that actually means, and how this movie that came out in 1999, why is it still so popular? Why are people still talking about it? Taking the red pill, taking the blue pill. Let's see what it says here. We're going to go ahead and put that on the screen. But our engineer today is Kirk Nugent, and he's going to put some of his information in the chat about, if you want to do more about getting your message out on live video, on live streaming. When you put your stuff out there so people can see you live, and catch your passion, catch your energy, catch what you're talking about. If you have value to give, this medium of getting it out there is huge. Not only can they get it out there live, but it stays up there forever, and people watch it over and over and over again. People have come to me and called, and they have recited whole passages of what I said online, because they've listened to the videos over and over again. And that, I tell you folks, that is such a good feeling, that when you put the time in, that you're actually helping people, and they're listening to what you're saying, they're remembering what you're saying, they're even memorizing what you're saying. So if you want to get your information out there, Kurt, why don't you put something in the chat about how they can get a hold of you, or put something on the screen if you're watching us online. There you go. Go to Kirk Nugent. Go to kirknugent.com. That's his card. He is the producer of this show. All right. So here's what this says, folks. Here's what this says. Let me make it a little bigger. So if you're watching this online, you can actually see it. So let me put this. Oh, all right. No, I want to go back. All right. And let's take a look at this thing. Here's what it says. The red pill and blue pill represent a choice between the willingness to learn a potentially unsettling or life changing truth by taking the red pill, or remaining in the contented experience of ordinary reality with the blue pill. The the terms originate from the 1999 film The Matrix. Okay, so folks, what is it that we want? Do you want to stay? Do you want to have the status quo? Because I'm telling you, when it comes to borrowing money, listen to me now. When it comes to borrowing money, literally, we have been shut out of learning the rules to the game. Credit Goddess, what are you doing in the audience? Doggone you. Come on up here. Credit Goddess, come on up here. All right. Let's see if I can get her to come up. Okay, Rose, let me invite you to speak here. There we go. I've invited. So anyway, let's see if you can get her to come up. All right. Anyway, but listen, folks. There we go. Okay, she raised her hand. All right. And something is happening. Rose, I'm trying to get you to come up, but the app is being glitchy today. So let me try this. It says user has already been invited to this room. I know that. All right. And she's raising her hand and she's still not able to get up. I don't know why. I don't know why that is. So I don't know. Maybe if you go out and come back in, Rose, I don't know. All right. She's going to try that. She's going to go out and try to come back in. There she is again. Raise your hand, Rose. Let me see if that works. All right. Invite to speak. Nope. It just says user has already been invited to this room. Come on, people. Come on, Clubhouse. Why are you doing me that way? I can't. I don't know, Crows. I can't get you to come up. Somebody else raise their hand. Somebody else raise their hand. Come up to the stage. I want to try something. Somebody raise your hand. Come up to the stage. See if I can get you to come up. Let's see if it's my situation here. All right. We sent you an invite to Giovanni, and I've tried it, and she's not coming up either. I don't know what's going on. You know, with this new room, I can't set it up. I can't set it up. You know what? Let me do this. Let me try something else here. All right. It's going to take me a couple of minutes, folks. I'm going to go in to back here in my back channel and let's see, get to the members, search members. Okay. Who's that? Who just came to the stage? All right. And make admin. All right. There we go. So we'll try it that way. Hi, Giovanni. How are you?
Good morning. How are you?
Doing fine. So you were able to come up. So Credit Goddess, I just made you an admin. So if you go out and come back in, that should put you straight on the stage. Let's try that. Okay. Let's try it that way and see if that will bring you straight up. So Giovanni, now that you're here, do you have a question or comment, or you just want to come up and sit on the stage for a while?
I was just trying to help you out.
I
I'm about to
appreciate.
drop my daughter off.
Okay.
I'm listening.
I appreciate that. Thank you so very much. You helped me out. It helped me to realize something. So so I tried to now you are you're an admin, Rose. So when she comes back, all right, so she's tried to go out and come back. And I don't know. I don't know what's wrong. I can't get you to come up. I am so sorry. I don't know what it is. Anyway, um, so what are you seeing? Are you seeing the invitation, Rose? You can put it in the chat. Are you seeing the invitation I sent you? All right. And because I'm trying to send it, but I don't know if you're seeing it. But anyway, so folks, we're going to put this back. We're putting this on the screen today. Here's what we're talking about. We are talking about the matrix. We're talking about a way of understanding, all right? A way of understanding. All right, she raised her hand again and I still can't get you to come up. And I just tried it again. Huh. We're trying right now to help people to understand what is actually going on with lending. How much information is actually out there? So let me ask this question. We have, how many people do we have in here right now? We have 15 people in here right now. We have some people online watching us already. Here is what I want to ask you about right now. Okay. How many of you have ever had a class on how lending actually works? How many of you have had that have had that class? Okay. How many of you had a class on how lending actually works? Anybody? Anybody ever had that class? Okay. Anybody ever had a class on how lending actually works? Now, there is, I wish I had some data on how much money is actually being made from interest every month. But in my book, which is on the screen right now, I mention in my book a term that we coined is interest consumption. How much interest are you consuming? How much interest are you paying every month to own what you own, to buy what you buy? And I do have some statistics that talk about how much of your money that you make each month goes to interest. 35 to 39% of your take home pay goes to interest on loans. 35 to 39% on average just goes to the interest payments on your loans, not the full payment, but just the interest part. When you add up all the interest, the average family has 13 different kinds of loans, 13 different loans, whether it's mortgages, student loans, credit cards, car loans. And you take a look at the entire family, you take a look at this family and you say, well, how many loans do you have? And you add them all up. The average family has 13 different debts. That doesn't necessarily mean they're in financial trouble, because you can get 13 different debts very easily. Very easily. If you have a mortgage, that's one. If you're a graduate of college, of any college or university in the United States, chances are you may have some student loans too. So if you're a married couple, what if you have at least 5 student loans each? You know, 5 student loans each. I know people who have a lot more. But let's say you have 5 student loans each. That's already 10. And a mortgage, that's 11. If you have 2 cars, so that, maybe it's a dual income family, so those cars are probably bought on time. So there's your 13 right there. And we haven't even talked about credit cards. So the average family has 13 different debts, and it's so easy to get there. And you could be doing very well in paying all of your bills on time, vacationing when you want, buying what you want, and living a very comfortable life, but not even realize that 35 to 39% of your take home pay pays interest alone. That is amazing. How much money we pay in interest. Somebody, somebody is getting rich off of renting money. And this is why we're talking about, let's put that back on the screen, the red pill and the blue pill. This is why it is so important for us to understand that you don't have to live this way. You can do something that is uncomfortable. In fact, just this Monday, just on Monday, in the mortgage syndicate, I made a statement. And a longtime mortgage professional challenged that statement. And the statement was, the interest rate you're quoted is not the interest rate you pay. The interest rate you are quoted is not the interest rate you pay. Now, I want to give you, and before I could even get it out of my mouth good, there was an instant challenge saying, oh, yeah. Whatever interest rate you're quoting, because I've been doing this for such a long time. And I mean, they were clearly in the matrix. Their mindset was so much so in the matrix, they've been in the mortgage business for so long, they didn't even challenge what was actually going on. Let me show you what I'm talking about. I'm putting this on the screen right now. I'm putting an amortization schedule on the screen. And if you ever want to do this on your own, this is online. This is not my program. I didn't write it. We just use it for educational purposes. The guy's name is Brett Wissel, Bretwhissel. If you ever want to do some of this on your own, go to Brett Wissel. I like this because it gives you 2 extra columns in the amortization schedule. It gives you cumulative principal and cumulative interest so that you can actually begin to see how much interest you're actually paying on your loans. All right. And if anybody has a mortgage and wants to use their own mortgage as an example, I will put your numbers in here so that you can actually see it. Otherwise, I'll just make something up. So if you are in the room today and you want to talk about your situation and use your particular numbers, I'll be glad to show up. So just raise your hand and come to the stage. And we're having trouble bringing people to the stage right now, but I don't know what's going on. But anyway, so let me put something in here. I just read that the median home price across the country right now is about $400,000. Now, it may be different in your area. It could be the median home price is $200,000 in your area. It could be that the median home price is $1 million in your area. But when we average it out across the US, it's about $400,000. Okay. Interest rates now are right around like 6.5%. Okay. 6.5%. And so what I was trying to indicate is that the interest rate you're quoted is not the interest rate you end up paying. And this particular person wanted to challenge that and saying that I didn't know what I was talking about because they were clearly in the matrix and not looking at this. So when I pointed out that if you have a $400,000 mortgage, you borrow $400,000. And the total interest that the bank wants from you over 30 years is $510,177.20. If that is the kind of money that they're going to make off of you in 30 years, how is that 6%? How is that 6%? Folks, let me ask you something. Does this look like 6% to you? All right. If you're watching this, if you're seeing this, if you're here on Clubhouse and you also want to see this online, okay, we are clearly in the mortgage matrix. If we continue to get these loans at 3, 4, 5, 6, 7%, and we think that's what we're paying, even though when we close, we have to see this number, 510,000. Somehow we think that when we borrow money, we're going to pay 6% of what we borrowed. I mean, isn't that the thought? Isn't that the thought you go into this with? That I'm when I borrow this money, I'm going to pay 6% of what I borrow. And maybe I'm wrong. Maybe you don't think that way. Do you think, have you ever really thought about it? Are you actually thinking that you're borrowing money and you're getting at 6%, that you're actually going to pay 6%? Because if we do the math, I'm going to put this calculator on the screen. I got $400,000, and we're going to multiply that by 0.06. Here's 6% of $400,000. 6% of $400,000 is $24,000. That's it. 6% of $400,000 is $24,000. So Brett says, he says here in the chat, it says, a great point. This actually takes place in what I call the new real estate agents within the last 15 years. The same thing, they don't understand the hype and lies that just went on. Okay. He comes back and says here in another sentence here, he says, and of course, when I got on this app, I started telling all the real estate gurus, all the investors, everyone that it was fake. They didn't listen. I told him that in 2020, okay, I don't know, he didn't finish that. Hey, it was real estate. It was real estate was at least 25 to 20, that 50% overpriced. Wow, I must have had a glass bowl somewhere. All of a sudden, real estate starts dropping, mortgage rates go up. Okay, so here's what we're talking about, folks. We want you to understand that even though what we see on the outward appearance is people buying and selling homes. People buying and selling homes. I buy a home for $400,000. Okay. Somebody has to sell that home for $400,000. And so the seller receives the money that they sold their home for. But where did the purchaser get the $400,000? The purchaser got the $400,000 from the mortgage industry. That's where they got the $400,000. I need you all to start inviting some more folks in here because they need to see and hear this. We are so entrenched in the matrix that I'm giving out the red pill today for anyone who wants to know the truth about what's really going on. Because we just saw that if you have a mortgage at 6%, 6.5%, okay, 6.5%. Okay, I did it wrong. Okay, got 400,000. Come on, 400,000. Okay, times 6.5% equals $26,000. I take it back. It's not 24,000. It's 26,000. 6.5% of 400,000 is $26,000. How in the world did the bank get us to pay $510,000 interest on a $400,000 loan, and they still get to call it 6%? Have you ever wondered that? All right. Simon Steele says, once again, great teaching, sir. Thank you, Simon Steele. I'm sorry, Simone. Simone Steele says, great teaching. And she's watching us on Facebook right now. So, folks, what in the world is happening when we think it's okay? We are walking down the street in a financial fog, believing that 6% is really 6% here, or 4% is really 4%, or 3% is really 3%. Let me put up some other ones. Let me put up some other ones for you here. So we're going to duplicate the tab. We got $400,000, okay? We're going to change that to 5%, okay? Now I'm going to do an even 6%, an even 6%, okay? Even 6%. And I'm going to show you what's really going on here with these two loans. On the first one, remember, we're talking about the red pill and the blue pill this morning. Which one do you want to take? The red pill, you're going to have to deal with what's really happening and make some definite choices about, do you want to stay in this situation, or do you want to do something to get out? Or do you want to take the blue pill, go back to sleep, and just keep things the way they are? In fact, some will actually argue you down to keep you in the matrix. In fact, in this movie, one person who escaped the matrix wanted to go back in. I want to go back in. I am tired of what the real life. I want to go back to sleep. I want to go back into the matrix where everything was nice and calm and even. I didn't have to make any decisions. Everything was okay. And I'm going to give the bank exactly what they want to charge me. And I don't have to do any thinking. I don't have to be uncomfortable. I don't have to deal with the fact that what I'm doing is actually helping my family. But the people that I talk to, they don't understand me. They don't get me. They try to talk me out of it. You see, folks, we can take that red pill and do what's uncomfortable and live an excellent life. Or we can take the blue pill and live the life that somebody else prescribes for us. What's it going to be for you? Okay. So at 4%, at 6% here, look at this. It's 5 at, we're going to put, let's see, we're going to put this at 6%. We're going to get a new loan here. All right. A new loan payment to $2,398.20. And the interest cost on this loan over 30 years is $463,352. That's 115.838% of what you borrowed. This is the effective interest rate. 115.838%. That's what's really going on here. They get to call it 6%. Now, when it's 6.5%, we were at 115%. Now we're at 127% at 6.5%. 127% on a loan. Do you know right now there are states that are trying to regulate payday loans because of the excessive interest that they're charging? I don't know of any other loan that needs to be called out. I think these mortgages are worthy of being called out. Don't you? If you can tell me 6.5% and somehow that appeases me, that makes me feel okay. But when it's really 127%, and when I get to 6%, it goes to 115.838%. So let me duplicate this tab. And we're going to take it down to 5%. 5% has got to be better, right? 5%. So now if I can get it to 5%, see, when you refinance to get it to a lower interest rate, or you want to pay additional money to get points so that you can get a lower interest rate, 5% now. So I'm at 6.5%, but I'm going to pay a little extra money to get a 5% loan. But that's still $373,000 in interest on a $400,000 loan. That's almost as much money as I borrowed in principal, 373,000. Look at this. Look at this. Which means all 5% mortgages for 30 years means that you're going to pay back 93.256% of what you borrowed. All 5% loans are 93% loans if you have them for 30 years. Who's telling us that? Who's trying to wake us up from the matrix? Or are we going to continue to live in blue pill land? Or are we actually going to do something about it, learn from the pill method, and take the red pill that we're offering you so that you can cut your interest cost by about 75% and stop giving the bank all of that money? Let's do it another one. Let's do one more. Red pill, blue pill. Okay, red pill, blue pill. We're going to duplicate this tab and we're going to take it down to 4%. 4% has to be way better. 4% has to be way better. So we're going to do a 4% loan because I should feel better about getting a 4% mortgage only because it's less than the 6.5% mortgage people are getting right now. So if I can get a 4%, I've got to be doing way better because now the payment is $1,909.66. It's a payment I can afford, but it's a payment that is still expensive to maintain. What? It's less than the rent I'm paying. $1,900. But even at 4%, it's expensive to maintain. And here's what I mean by it's affordable, but still expensive. Here's what I mean. Here's my payment, $1,909. But here's what's happening. When I make that payment, $576 goes to principal. Look how much goes to interest. $1,333.33. That's how much goes to interest right there. Isn't that expensive? Out of your $1,900, $1,300 goes to interest. And if we want to know what the percentages are, let's put our calculator back on the screen. We're talking about being in the mortgage matrix today, ladies and gentlemen. And what I mean by the mortgage matrix is we have allowed the wool to be pulled over our eyes because we haven't had the education. But when we see these numbers, we don't even bother to ask what's really going on here because everybody is doing it. Everybody borrows money this way and no one is challenging it. You don't see it in the media. You don't see it in magazine articles. You don't hear it on the radio. You don't hear it on podcasts. But you are hearing it here in the pill method. I need your help today. I need your help today. And in fact, we did something on Sunday that we've never done before. We may do it again today if I can get some encouragement to do it. I've had people who have been listening to us for a long time, over a year they've been listening. But they've never put in their information. Here's what I'm going to do today. I'm going to put in the chat my business telephone number. Here's the business telephone number. It's 256-886-1867. There it is. I put it in the chat. I'm putting it also in the comments online. I'll do it one more time. It is 256-886-1867. And this is just for today. Just for today. We normally charge $150 for just an hour consultation. If you call the office today, we'll let you ask a few questions. You can ask for me directly. Call the office, leave a message. I'll call you back today. I've got other appointments, but I'll call you between the appointments. I'll call you and we can talk a little bit. How about that? Because I love talking about this. And some of you may want to talk in private and may not want to talk publicly. And you're not quite sure if we can actually help you or not. So you don't want to go through the normal process of paying for a consultation because you don't know if your situation may warrant that. Just give me a call and we'll talk. Okay? We'll talk for 5-10 minutes. So give us a call and we'll talk to you. 256-886-1867. Call that after the show. Talk to the operator who answers the phone and ask for me directly. And then they'll send me the message and I will call you back. That's just for today. Don't try it tomorrow. All right. Do it today. All right. So here's what we mean by what we're talking about. This is at 4%. At 4%, do you see here? 4%, 71% of what you borrowed will be paid back in interest alone. $287,477.60 is 71, almost 72% of what you borrowed here on this $400,000. That is still way too much. We're talking about being in the matrix today. We're talking about being in the matrix. Let's take it down to 3%. We're going to do it one more time. 3%. 3% has got to be better. Do you know, I hear people all the time talking about why would you ever pay back a mortgage? Because it's cheap money. These people are in the matrix bad. They're so deep into the matrix, they even try to talk you out of paying less interest because they're saying, why would you pay off a cheap mortgage? So let's put this thing at 3%. Let's see how cheap it is. Okay. 3%. Here's our new payment. We're going to take that $1,900 out. Our new payment now is $1,686.42. Way cheaper than rent. $1,686.42. I can get my house, but still, my very first payment, $686 goes to principal, but $1,000 goes to interest. 1,000 of your dollars goes to interest. Oh my goodness. Look at this. And at 3%, a 3% mortgage, $207,111 the bank wants from you in interest, and people gladly sign that so that they can give over 51% of what they borrowed in interest. And the bank can call it 3%. Folks, if that's not being in the matrix, I don't know what is. If that's not being bamboozled, I don't know what is. We're thinking all the while that, and we've got experts out there saying, do not pay off the mortgage early because it's cheap money. How in the world can they call this cheap money when I borrow $400,000 and then the bank wants from me another $200,000 in interest? That's enough to buy another doggone house somewhere at 3%. I'm buying a house for me and another house for the bank. How is that being cheap? That's not cheap by any stretch of the imagination, even at 3%. Lord have mercy. How deep are we into the matrix? Anybody, listen, I want to know right now. I want to know, put it in the chat, put it on the screen. If you're watching me right now, I need you to make sure that we understand the red pill means the willingness to learn potentially unsettling or a life-changing truth. If you're ready for the truth today and you want to implement the truth today, write red pill in the comment section. If you're online, put it in the comment section. If you're in Clubhouse right now, put it in the chat. If you're ready for new and better information, write red pill right now in the chat. Red pill. Come on. I'm ready for something new. I'm ready for, listen, right online, Giovanni Latta says red pill. She's watching us on Facebook right now. She says red pill. All right. Miranda Dowdy says red pill, red pill. I am ready to wake up from this malaise. I'm ready to wake up and do something different. Giovanni again says red pill, red pill, red pill, red pill. That's what I'm seeing. Brett Bogue says red pill. Okay. Miss Mickles watching us on YouTube says red pill. I'm ready for the red pill. I want to know what I can do about this. Johnson Arlu watching us on YouTube right now says red pill. Johnson Arlu is actually a church member. He's one of my church members. How you doing, Johnson? Okay. Johnson Arlu actually didn't believe that he could own a house. He thought it was a lot tougher than he thought. So I did a presentation at my church. Johnson came to me and says, because he has like student loans, he said he didn't think he could get a house. I said, oh, who told you that? Okay. And so within, I believe it was from the time he told me that, it was somewhere between 3 and 5 months, he and his family were in their new house. Come on, everybody. And he learned that he didn't have to pay all that interest for that house. That's kind of what we're talking about. Get yourself out of the matrix, folks. Get yourself out of the matrix, the mortgage matrix, and do something about it. Here's one thing you can do. If you are in the mortgage matrix right now, and you want to do something better, you're ready for this red pill experience, go to ice10k.com right now. At the top of the page, ice10k.com, ice10k.com, and click on where it says, get a savings and earnings report. Get a savings and earn. So Johnson says it was 2 months. I remembered it wrong. Listen, here's a family who thought they could not get a house. And 2 months after he mentioned that to me, he's sitting in his new home, moving from an apartment to a house, taking that money that was formerly going to rent and now going to build his own equity. 2 months from making, listen, it didn't take him long to break out of the matrix. Break out of the matrix. Says right away, I want to get into this thing. Okay. That's what we're talking about, everybody. Okay. So get a savings and earnings report today. You can know the month, the day, and the year you could be debt free. And it's usually within a 7-year period. How would you like to have, listen to this, superior financial education? That's what we offer here at the P.I.L.L Method. Superior financial education. We're going to tell you the truth about what's really going on. Okay? Because we give you private coaching sessions when you become a P.I.L.L Method client. You get private coaching sessions to understand what's really going on behind the scenes. Not only that, but you get innovative technology. You get AI, artificial intelligence, and we had this 17, 18 years ago before it got popular. With our cloud-based, artificially intelligent computing platform that we call the Opportunity Cost Calculator, you can plug all of your finances in, your current state of your finances, and this program will prompt you and guide you on how you can use your money, live well while you're doing it, save money at the same time, and pay off all of your debt. Remember, the average family has 13 different debts. You can pay them all off in an average of about 7 years. Some take a little longer, some are a little less. About 7 years. That's your mortgage, student loans, credit cards, car loans, because you want to break out of the mortgage. You want to break out of the matrix today. You want to take the red pill. And the first stage of taking this pill is this: get a savings and earnings report. It won't cost you a dime to get it, to know that I can use the budget that I have now. I don't need more money. I don't need to go out and sell pizzas at night. I can get out of debt in about 7 years with what I'm making right now. Yes, you can. And I don't have to sacrifice lifestyle. No, you don't. You can still live well and get out of debt, because the key to getting out of debt is not making more money, ladies and gentlemen. The key to getting out of debt is paying less interest, because it's just math. It's just math. If the bank can use math to make 6% into 115%, I can show you how you can take 6% and make it less than 1% without ever changing the mortgage terms. If they can make it do 115%, you better believe by doing math in a different way that benefits you, we can take it down to 1% or less. You want to see what I'm talking about? I'm talking about even talking about huge loans. Huge, where you can take your money, the money that you have now, and the loans that you signed up for to pay a lot of money in interest. I'm going to show you some things here right now. Put that on the screen. Open this up. I'm going to pull this over. We're going to put something else on the screen here, Kurt. We're going to come back and talk about later how people can get their information. But here is a commercial loan, $2 million, $2,236,000. That's 2 commercial loans. Okay. Here's how much interest the bank wants on this loan: $1,123,000. By working with us, this investor is only going to pay the bank $231,000 in interest. And let me show you what the effective interest rate is. We're going to blow this up so you can see it better. Okay. Here, his average interest rate right now is 4.34%. I'm going to show him how, without refinancing the loans, he's only going to pay back $231,000, which means he would need an interest rate of 0.67% to pay this little amount of interest. So we're taking it down to less than 1% here, ladies and gentlemen. Why continue to let the bank charge you 3% and when it's really 51%, or 4% when it's really 71%, or 5% when it's really 93%, or 6% when it's really what? 115.838%. And if you have a 7% loan, right now, you're paying back 139% of what you borrowed. We're going to show you how to get it down to about 1% or less. Here's another one. Here's one for $123,000. The bank wanted $45,000 in interest on this one, but the bank is only going to receive $12,000 on this one, $12,826. Okay, let's make this a little bigger. Okay, again, 0.67%. To save this couple $32,000 in interest they don't have to pay. Back to the commercial loan. How much interest are we saving this commercial investor? $891,000. They were making money on this deal. But we're going to show them how to save an additional $891,000. And to do that, if they had this loan from the bank would have to give them an interest rate of 0.67%. We're going to show them how to get that without actually having to refinance the loan. Man, oh man. You talk about some red pill information. Now, here's where it seems uncomfortable. Can I really believe that? Can I really believe that even though everybody else in the world is paying all of this interest, I can pay so little interest that my loan would actually perform like it was less than 1%? Let me show you something that is amazing here. I heard this on Business Over Breakfast here on Clubhouse. An investor has an 18% mortgage, but it's on a multifamily property and they're making money on it. Okay. They're making $6,000 a month on this property. That's a $200,000, excuse me, $200,000 loan. Okay. The payment on that is $3,014.18. And I'm going to show you when I'm all done with this, I'm going to show you how amazing this is once you learn how to read it. Okay. They're making $6,000 in rents. The payment on this mortgage is $3,014. So they're making quite a bit of money on this. Okay. But here's how much interest at 18%. Here's how much interest the bank wants in 30 years on this loan. Let me make it a little bit bigger. They want $884,974. Now, why is this matrix talk? Why is this being in the matrix? Because they're making about $3,000 a month on the deal, but they're not looking at how much interest they're actually paying. And because the renters are paying the interest, the renters are giving them the rent money. They're thinking that the rent money is different from their money. They're thinking that it is my tenant who's paying this mortgage. No, your tenant is paying you rent, and you're taking that rent money that they gave you and you're paying the mortgage with it. But because they gave it to you, you think it's okay to give most of it away in interest because you're making about $3,000 every single month. You're cash flowing $3,000. You're bringing in $6,000. You're paying out a little over $3,000, and you're bringing home almost $3,000 a month, free and clear. And you're happy. But what you're not looking at is the $884,000 the bank is going to make on that over 30 years. We show how you can get this down to $253,734, saving $631,000 in interest because you took the red pill. And now you get to treat this loan, when it's 18%, you get to treat it as if it were 6.47%. Wow. Wow, wow, wow. 6.47% from 18%. Would you like to see what an 18% mortgage actually looks like on $200,000? And I can give you some insight as to how you can save so much money, because when you take the red pill, you begin to understand what is going on behind the scenes. If you want to know how this works, put a number 9 in the chat. Put a number 9 in the chat right now, and I will show you this 18% mortgage. You will be shocked when you look at it, because you're looking at it because we're in the matrix. I'm going to teach you how to take the red pill and show you how you can look at this mortgage differently and how it could benefit you greatly. by taking the red pill, by getting the education from the pill method, by getting the opportunity cost calculator from the pill method, you can know what to do with even an 18% mortgage. I see one number 9. There's only one person wants to see an 18% mortgage and what to do with it. Oh, here they come. Here they come. I spoke too soon. I'm sorry. I see a bunch of number 9s coming in right now. All right. If you are online and you want to see this, if you want to see it online, if you're new to the room, and you want to see what we're talking about, go to YouTube on a separate device and search for P.I.L.L method, and you'll be able to see our live show. Click on it, and I'm getting ready to show you how powerful taking the red pill can be, even when you're looking at a loan, a mortgage at 18%. All right. I have a bunch of number 9s here online on Clubhouse. I don't have any number 9s online. Maybe people who are watching me, maybe they've turned away. Maybe they're not watching. People who are watching us on either Facebook, LinkedIn, Twitter, YouTube, whatever you're watching us on, put a number 9 in the chat if you want to see an 18% mortgage and how taking the red pill can give you new insights on how to handle even a mortgage at 18%. Are you ready? Are you ready? Let's put it on here. Okay. We're going to put in an 18% mortgage, $200,000. And remember, this is a multifamily property. The investor is pulling in $6,000 in rent on this thing. But the payment is this, pulling in $6,000 in rent, but here's the payment. Okay, it's calculating. Come on, Brett Whistle, you could do it. Calculate for me. I don't know why it's taking so long. Let me see if I can reload it. Okay. All right. So we're going to put in $200,000 at 18%. We're going to calculate that. There we go. $3,014.17 is the payment. Here's how much interest they want on this. Here's how much interest they want. $885,000. Thank you. Thank you, Omika. Omika says number 9 she wants to see, or he wants to see. I don't know if it's a he or she, but they want to see what I'm putting on the screen. At $200,000 at 18%, here's what the bank wants: $885,000. Do you realize it's legal? It's legal to do this. Total interest paid as a percentage of principal, 442%. That is legal to do. Okay, but we're going to show them how to treat it at like a 6% loan, 6.5%. How would you like to see that? Here it is. Here's the payment on this thing. And at first glance, you would say this is absolutely criminal. You only feel that way when you don't know how to read it, because we're in the matrix. We're right where the powers that be who lend the money, we're right where they want us, because now we're interest generating machines. In the matrix, they're taking human beings and making them batteries by extracting the electricity. Did you know your body creates electricity? And they are tapping into the electricity that human bodies make to power the machine world. What bankers are doing right now, they're tapping into your ability to take your time to make money so that you can take these loans that they give you and pay interest on them. And here's what's happening. This person borrowed $200,000. And now when they make their very first payment at 18%, only $14.17 goes to principal. $3,000 goes to interest. And that is legal to do. Folks, is that the matrix or not? Is that being in the matrix or what? Even though they're making almost $3,000 a month because they're bringing in rents of $6,000, but the payment on this is $3,014 because the tenants are paying the rent. The landowner is totally in the matrix and not even thinking about the fact that they're buying back their equity, buying back the property from the bank at $14 and $15 and $16 a month, but they're giving the bank this kind of interest money. I'm going to teach you how to read this so that you can get out of the matrix. Are you ready? Are you ready? I wish I had somebody who could come to the stage and talk to me about this today. If you wanted to help, if you wanted to learn, I would teach it to you. I'll teach it to you. All right. But here's what we're talking about. Let's pretend. All right. Let me see if I can invite credit. Credit card is still broken. It's still broken. It says user has already been invited. I've tried and I tried. Oh my gosh. I wish I could bring you up. Okay. I don't know what's going on. It's broken. I'm using my iPad, and I don't know if it's my iPad or if it's the software or a glitch in the software. But I brought somebody else up. Oh man, I don't know. I'm sorry, Credit Goddess, because I would love to have you up here right now. But here's what we're doing, folks. Let's pretend we're making the first payment in January, where only $14.17 of your money is going to interest. Going to principal, and $3,000 is going to interest. Let's take a look at the percentages here. My interest is $3,000. My total payment is $3,014.17. So we're going to divide it by $3,014.17. Here's what this real estate investor was doing before they met us. 99.5%. 99% of his payment was going to interest. Only 1% was going to principal. Meaning, out of every dollar he gave the bank to purchase this property, for every payment dollar, 99 cents of that dollar was going to interest, and only 1 cent out of every dollar was going toward this property. If that's not being in the matrix, I don't know what is. And it's perfectly legal. And it was willing to do that because this is not part of our educational system. So let me show you something that's quite simple. Because the banks have chosen an amortization formula that makes this kind of money, they depend on this one fact alone. Here it is. You can never, I'm looking straight into the camera now, you can never know how they do it. If you learn how they do it, you can save a ton of money in interest if you learn how they do it. And you can do something about it. Now you can come up with a plan to do something about it. Here's something simple that you could do. Let's make our first mortgage payment here in January. January's payment is done. February's principal payment is $14.38. Here is my question to you, ladies and gentlemen, in here right now, watching us online and listening to us on Clubhouse. If next month's principal payment is $14.38, do I have to wait till next month to give the bank that $14.38? I'm looking for yes or no in the chat right now. Do I have to wait till next month to give the bank $14.38? Yes or no? Okay, Giovanni says no, you don't have to. You don't have to wait. You do not have to wait. So if I make my regular mortgage payment in January and give the bank San B says no. San B says no. I can take that $14.38, and before February 1st, I can give the bank an additional $14.38. And when I do, all of that money goes to principal. I'm paid down to 100. I'm paid down to line 2 on my mortgage, where I still owe only $199,971.45. My next mortgage payment is now on line 3 of my schedule, because I gave the bank $14.38 early. And because I did that, I do not have to I do not have to give the bank this $2,999.79 in interest. Folks, that's taking the red pill. It is so hard to believe that by just paying $14.38, I wipe out an entire payment on this schedule, where the bank was looking to receive $2,999 from me. And then the next month, on for February's payment, I'm now on line 3, which would be March's payment. Now I still have the whole payment to make. But what I've done by giving the bank $14.38, I've gone for 360 monthly payments instantly to 359. What if we did this? Okay. Are you ready to wake up a little bit more out of our sleep? Do you want to get the full benefit of taking the red pill? Because when you take the red pill, folks, it will definitely benefit you. But you're so used to being in the matrix that this may feel uncomfortable to you, because you know what they say: when it sounds too good to be true, it usually is. And that's where the discomfort comes from. It's called cognitive dissonance. Is this really true? Is this really how it works? You better believe this is how it works. Because if you make this mortgage payment, okay, this regular mortgage payment of $3,014, okay, and let's say you give the bank 3 additional principal payments in January. You give them $14.38, and then add to it $14.60 from line 3, and then add to it again $14.82. Okay? About $45. About $45, less than $50. Give them about $45. Guess what? You eliminate nearly $9,000 in interest. Oh my goodness. Nearly $9,000 in interest. Do you see why there are certain people that never want you to know what's going on? Do you see why they want you to remain in the matrix? Listen, take the blue pill every day. We'll show you how to still make money, but we don't want you touching our interest money, because we want you to focus over here while we're doing this over there. $45 can save you nearly $9,000 in interest. What do you all think of that? What do you all think of that? What's your response to that, ladies and gentlemen? So I need you now to take a look at cumulative principal and cumulative interest on this thing. Cumulative principal and cumulative interest. Look at this. Look at this. 1 year's worth of principal payments. That's $14 payments. Then we go to $15 payments. Then we have the last payment of the year is $16.69 that goes to principal. And you have all of these $2,000 and $2,900 interest payments. So in 1 year, this real estate investor, okay, will pay this thing down, will pay this loan down, okay, by $184.79 going to principal. And this is a person whose tenant is giving them the money. $35,000 goes to interest. $35,985.25. Folks, what kind of sense does this make? Even though they're making nearly $3,000 a month, should we ignore the fact that by paying this loan on time for the first 12 months, only $184 goes to principal, while $35,985.25 goes to interest? Should we continue to ignore that fact? I'm telling you, that is absolutely ridiculous. Ridiculous. So here's my next question. And listen, this is some real red pill stuff, folks. This is some real red pill stuff I'm getting ready to tell you right now. And I promise you, no matter who's looking at this, who's seeing this, I promise you it does work exactly this way. If I know I'm going to pay $184.79 in 1 year, that's going to principal, do I have to pay this $184 in 12 monthly installments? Do I have to do it the bank's way? I'm talking red pill stuff now. I'm talking doing the uncomfortable, but it's going to benefit you greatly. $184.79. Do I have to pay that in 12 monthly installments? Watch this. Sam B says pay it beforehand. What if I made my regular mortgage payment of $3,014 and gave the bank this additional $184.79 on top? Do you realize I'm paid down to line 12 on this amortization schedule in just 1 month? Yeah. By giving the $184.79 early, I'm paid to line 12 in just 1 month. And I get to skip all the interest payments between line 2 and line 12. I never have to pay that. Guess what just happened? I just saved $32,987.77 in interest I never have to pay, just because I gave the bank $184.79 early. This is an 18% loan, folks, and we are owning it. Listen, we are beating this thing up because I now have taken the red pill and I know how to read this thing correctly. The very thing that mortgage people don't want you to know. Even though you're a real estate investor and making plenty of money, okay? I mean, listen, if I'm making that kind of money where I have, listen, this is what gets so distracting. I'm bringing in $6,000 and my mortgage payment is $3,014.17 equals $29,85.83. Multiply that by 12, folks. That's $35,000 a year. $35,000 a year. $35,829, almost $36,000 a year I'm making on this property. Do you see why it's so easy to stay in the matrix while I'm making $35,000 a year, but at the same time, I'm giving the bank $35,985 in interest that I don't have to give them? Whew. So when we do this, if we were to prepay the $184.79, that saves us $32,987.77 in interest to get to the very same place. If I pay it monthly for a year, I'm going to be here. Or I could be here in 1 month by prepaying $184. What would happen Oh man, look at this. Here's $405. Listen, are you taking the red pill this morning? Are you seeing what I'm talking about? $405.72 prepaid saves me $68,000. If I prepay $669, I knock off 3 years off this loan and save $104,000 in interest. Are you beginning to get it now? Are you seeing it now? Do you understand what's going on now? Let's just go down to $1,000. If I prepay $1,000 right here, I knock off 4 years off this loan and save $143,000. $1,000 prepaid on this loan saves $143,000 in interest. Are you ready to wake up today? Are you ready to take the red pill today to do something that's uncomfortable? Are you ready to go to let me listen again? If you came in late, if you want to call me today and talk to me for free for 5 or 10 minutes, you can call 256-886-1867. I'm putting it in the chat one more time so you don't have to look for it. That's 256-886-1867. All right. I'm putting this in the chat right now. We're going to put it online as well. All right. If you want to talk about it, call my office and the receptionist will take your message. You know it's the pill method because they're going to answer the phone. It's a great day of the pill method. How may I direct your call? It's a great day of the pill method. How may I direct your call? You're going to say, I'd like to leave Don Daniel a message. Please have him call me back today. And that's what's going to happen. Okay. So we're going to put it in the chat as well. 256-886-1867. I'm putting it online as well. There it is. There is the number you can call right now. I put it out there on Facebook. I put it in on YouTube. You can call me 256-886-1867 and leave a message. You've learned something today. You want the red pill experience. You're tired of not understanding. You're tired of doing it the same way over and over and over again. And you want to learn it a new way. You're ready for waking up and taking this money and doing something else with it. Let me show you what the real benefit is in understanding the red pill experience. Let's go back to here. Let me show you the understanding the red pill experience with the $200,000 right here, not paying all of this money in interest, saving the $631,000 in interest. This can now take that money, instead of giving it to the bank, and in a short period of time, make an additional $886,000 by investing that money instead of giving it to the bank. An extra $886,000. And that's at a 1% return on their money compound interest, only 1%. Making an extra $886,000 by taking that money and investing it and not giving it to the bank. That is the true red pill experience. Taking that money, not giving it to the bank, and listen, that's only at 1%. Let me show you another one. Okay. We were here. This is the mortgage for $123,351. Okay. And they were supposed to pay $45,000 in interest, but they're going to pay $12,000 in interest instead. They're going to take that money and turn it into the money they're not giving it to the bank. They're not giving to the bank. They're going to turn that into $672,000. $672,000. that they could make for themselves instead of giving that money to the bank and investing it for themselves. And that's at 1%. Man, you could put that money in a CD and get that. But that's just at 1%. What if it were to get 5, 6, 7, even 10% return on your money? What would that be? That would be well over $1 million. Here's my investor my other investor with $2 million in loans. Okay. Instead of giving the bank an extra $891,000, instead of giving the bank an extra $891,000, they're going to take that money, instead of giving it to the bank, and turn it into over $9 million in a true red pill experience. Stop giving it to the bank and invest it in yourself. And this is at 1% return on his money, not the 10 to 12, the 15% he's used to. This is what we're talking about. This is why we do what we do. This is why we show up 3 days a week to give out this kind of information. Are you happy that you got the red pill experience today? Folks, listen, I want to thank everybody for coming to the show today. I want to listen. If you want to know more information, go to ice10k.com. Go to ice10k.com right now and say, I want the red pill experience. Okay. I want the red pill experience. And I just don't want to talk. I want to fill out the paperwork. I want to go in and fill out the paperwork and get a savings and earnings report. Go to ice10k.com, ice10k.com. Click on the button that says get a savings and earnings report. Fill out your information. Oh, by the way, make sure when you're confirming your cell phone number, make sure you don't have any spaces, no dots, no dashes, no nothing. Make sure you're putting in there are no spaces in the phone number. And then when you click confirm, we're going to send you a code as a text message. Take the code and put it into the website and give us all the information we're looking for. And then click, I want to save. When you click, I want to save, then I'll let you into the financial form. Put all your information in, and you will know the month, day, and year you'll be debt free, how much interest you could save, and your potential earnings from that money saved in interest. We're going to give you that number as well, so you can see what your money can do for you instead of giving it to the bank in a blue pill haze. I'm tired of living in the mortgage matrix. I want to wake up today. I want to get my red pill experience. And I want to know the month, day, and year I could be debt free, how much interest I could save, and how much money that money can make for me and my family. We're going to go over that with you today. Fill it out today, folks. And if you want to get some basic information on how all of this works, you can get my book as well. It's been a 6-time bestseller on Amazon. The only book that talks about that gives you information on how to have the red pill experience. Telling you that you don't have to do it this way anymore. Now, it's not a ABC 1, 2, 3 methodology. That's not what you're going to get with this book. What you're going to get with this book is what we need to learn, what we need to understand. We need to stop doing the old way and learn how to do it the new way, using education and technology. We marry education and technology and help you to understand why you need both to beat the bank at their own game. Education and technology, and you'll begin to understand it. And for some of you, the light bulb will come on only after you read. I don't know. Some of you learn different ways. Some of you have to read it. Some of you are okay with listening to it. Some of you are okay with just going ahead and experiencing it by filling out the paperwork so that you can get a savings and earnings report today. Get it today. And once you do all that, maybe, just maybe, You are inspired enough that you want to tell other people about it. Folks, I need your help. Even though these videos stay up forever and people watch them multiple times, we have over 800,000 views on our YouTube channel. Okay, almost 900, almost a million views. We're trying to get to 900,000 and then over to a million views, all right, on these videos. I need your help in sharing the information. You can become a P.I.L.L Method affiliate. Go to ice10k.com and become an affiliate today. And by sharing this information, it is possible for you to make anywhere between $300 and $3,000 a month sharing this information with other people. Once they become a client, let me give you an example of how this would work. You know someone who is tired of living in the matrix and they want the red pill experience. They want to wake up. They want to do things better. They're tired of doing it the old way. You just send them over to some of my videos on YouTube, have them watch the videos, and then you follow up with them, a couple of days later, no more than 2 days. If they're still interested, go back to the same card, ice10k.com. And there's another button on there that says refer a friend. You fill that out. Fill it out. Put their information in. When you put their information in, there's another space that says, who referred you. You put your name and your number in there. When that person becomes a client, they want to take the red pill and have that red pill experience. When they become one of our clients, we will send you $300 just for sharing that information with us. You don't have to sell a thing. And if you do it often enough in the same month and share it with others in the same month, you can make anywhere from $300 to $3,000 in a month just by sharing information. We need your help today. Go out there and help yourself, help your family, help other people. But we got to get this information out because right now we are all in the matrix. So there's your 3 things that you can do actually 4 today, because we're giving away a special. If you want to have a private conversation with me today, call 256-886-1867. That's 256-886-1867. And my receptionist will take your call, take your phone number, get your information, and I will call you back today. And we'll have a short conversation about your situation, see what you can do. You can do that. You can also get your savings and earnings report today by going to ice10k.com and filling out the information. You can also get my book from Amazon. Folks, that's what we're doing for you today. Share this video with other people today and benefit from it yourself and help other people. And if you are on YouTube right now, or Facebook, or Twitter, or LinkedIn, join our community wherever you are. Click on join, click on subscribe, click on whatever that button is on wherever you're watching us. And then click the notification bell so that whenever we're on, you will be notified. And we'll bring you more valuable content like you got today. Folks, I want to listen. This has been exciting for me, exciting for you. If you learned something today, put a number 9 in the chat because we're getting ready to get out of here. If you learned something today, put a number 9 in the chat, and you want to make a quick comment about what you learned today, put it in there as well. I'll read it before we go off. We have just a few minutes left before I say goodbye to you. Syed says number 9. They learned something today. How about you? Have you learned something today? Have you learned something today? Is this good information? Okay. Can you get this anywhere else? Have you heard this from Dave Ramsey or Susie Orman or anybody else online? that this is the kind of thing that you could do once you understand how to read an amortization schedule, and then have a program, and an artificially intelligent program that can guide you, tell you exactly what to do and when to save you the maximum amount of interest that's mathematically possible so that you could pay off all of your debt in an average of 7 to 9 years. So I want to thank everybody for being here today. We have some number 9s in the chat. Thank you so much for showing up, everybody. All right. And we're going to be back here on Friday with more valuable content, with more information just for you. Listen, spread the news. Spread the news. I love having people in here so that we can give out this information, so that you can know, so that you can wake up, so that you can have that red pill experience. But here's what Johnson Arlu says right here. He says, I've learned that the red pill leads to salvation. Come on. Listen, Johnson, you're trying to give, listen, you got 2 preachers on the line right here. You're going to have us preach this thing. Listen, I want you to know that Kirk Nugent is also the pastor for media.
That's right.
At his church. Come on, Pastor, talk to us.
Oh man, I saw Johnson's comment. I said, man. Yeah, I wanted to highlight the fact that, the Right Reverend Elder Don Daniel also has the red and blue behind him in his set. He's got the red and blue behind him. He's got it on either side. I just thought that was so awesome. I wanted to bring him back full screen so you guys could see that. But no, Johnson, man, you triggered the 2 of us when you said the red pill leads to salvation. The truth of the matter is, it's a choice. I think that's a great takeaway from this conversation today. It's a choice. Do you want to be free, or do you want the illusion of freedom? I mean, it's so good. It's just so good.
Wow, the illusion of freedom. Come on.
Illusion of freedom. They say, you will stagger blindly in the desert towards a mirage of a lake with the potential of getting some water. And when you get to the mirage, of course, there's no water there, but people will drink the sand anyway because of the illusion of freedom. The illusion of freedom. I'll just drink the sand. It was water when I was walking over here. I guess it's water still. I love what Don has set up in this space. I'm always excited when I can just jump on here. I know for some of you on Clubhouse, you're wondering, where's this voice coming from? Don and I are actually together in StreamYard, which is a web-based streaming studio. And that's what we're using today to multi-stream to both Clubhouse, but also Facebook, LinkedIn, YouTube, and Twitter. And that's one of the things I get to do. Don is absolutely correct. I get to serve as media pastor at the University Church here locally in Huntsville. And Don and I get a chance to see one another every now and again. But man, I absolutely love what Don is doing. There's so many different definitions of calling and ministry. And I believe firmly that ministry is not only people standing in front of a desk and preaching. I think it can also look like somebody with some headphones on, with a red and blue light behind them, microphone in front of them, and they're sharing with people, here is the solution. Here is the way. Walk ye in it. Here is a choice for you to make, right? That will impact the rest of your life. This financial information, the opportunity cost calculator that Don is espousing, that he's been sharing with you guys for the last, how long we've been live? Hour and 36 minutes. It is a game changer. It is a game changer. And it's something that my family and I have signed up for. We are using it, and we know exactly the month, day, and year we'll be debt free. And I just want to encourage the rest of you that you not only, the first step is to get the savings and earnings report. Go to ice10k.com, get that savings and earnings report, follow the steps, get that so that you can make a decision. That's really the biggest thing. Don said to me the other day, he's like, hey, how do you advertise the pill method? I said to people, number one, are you looking for a better way? And if you're not, then, it's okay. Because let's be clear. Not everybody's looking for a better way to eliminate debt. But if you are, I'm saying to them, just go ahead and get the information that will allow you to make the decision. I'm not even telling you to go and buy the program. I'm just telling you to get the information that'll allow you to get to make a decision. And that is what that savings and earnings report represents. The information that will allow you to make a decision. Johnson Arlu is right, man. The red pill leads to salvation. Salvation doesn't only deal with life and death, heaven and hell. Salvation can deal with the generational curse of living in debt and poverty and overextended. Being able to be financially free is salvation. And that's what Don is sharing with us today. And I just want to add my 2 cents in there. Don, I'm throwing it back to you.
Thank you so much, Kurt. Listen, everybody, we're going to get out of here. But before we do, somebody else we were able to share information with, who is a motivational speaker. In fact, he's the number one motivational speaker in the world. Not only has he benefited from this red pill experience, he actually grew up in Detroit, Michigan, came here to Huntsville, got in as a student at Oakwood University with a GED, okay, came to Oakwood University and graduated some years later. And now he has a PhD. You see, he was in the matrix, but decided he wanted to do something different with his life and broke out of that generational curse with living his life one way. And now he lives his life a different way. But even being the number one motivational speaker in the world, he still had a mortgage and he was still borrowing his money at retail. But when he learned about this red pill experience, he decided he wanted to use this information so he could borrow his money at wholesale, pay a lot less interest, and still pay off his house and own it. We're going to get the last word from Dr. Eric Thomas, E.T. the hip hop preacher, and we're going to say goodbye to all of you until we come back here on Friday. Take it easy, everybody. See you again on Friday.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.